Hello, everyone. Welcome to Next Big Future. Today, we're going to look at the future of cars, EVs, and when will the internal combustion engine car makers go bankrupt. So, ICE cars will be less than half of the cars in Europe by about 2025, based on projections that I've done. And there'll be the same halving, more than half by 2024 in China, and by 2026 in the United States. US has a slightly slower adoption, and also there's a lot of large SUVs and pickup trucks in the United States, which will take longer to replace by a couple of years. We have hit past the knee of the S curve of technology adoption for EVs. Norway is already well past that. They've gone to 80, 90% EVs. It took them 6 years to go from 10% to 75%. China's about 23, 25% this year in terms of like number of EVs versus total cars. And that could end up being about 30% by the end of this year. Europe has various levels of about 20 to 30%. California is over 10%. So this EV explosion will happen over the next 4 years or so. In terms of bankruptcy, GM went bankrupt in 2009, which caused problems for retirees, of course, shareholders. Some bondholders got a little bit of money in the new GM. And you can see that GM had a decline from 1980 to 2009. So it took 29 years to go from 43.8% of the US market down to less than half, 19%. But they have some sharp drops, mid to late 80s. They had a sharp drop as Japan and European car makers got more of the US market. And then they also flattened things out, held things stable above 30% for a while. And then things collapsed again at the beginning of the 2000s. So car companies have had experience going bankrupt and losing market share, but it'll be a far faster market share loss this time around. By the way, please like and subscribe. That will really help the algorithm. So you can see that GM got a bailout of $51 billion and GMAC got a $17 billion bailout. And then after several years, only some of that money, came back to the taxpayer. And it, may not come this time. Like they could get another 50 billion or 100 billion, $200 billion bailout based on the amount of debt I think they have. And then this time around, none of it could come back. Chrysler also went bankrupt and then got bought by what is now Stellantis, Fiat/Stellantis. And then the car companies that continue to get bailouts now. Renault's getting bailouts, Nissan got a bailout, Toyota, Daimler, which is Daimler is Mercedes, Volkswagen, Ford, GM, BMW, they all get US Federal Reserve bond purchases for about $5 to $8 billion each, where their bonds are bought and they can get lower interest rates for their bonds. Ford has split its EV and legacy autos into separate units. They say it's so they can, have, service the electric cars as well as the old cars better. Coincidentally, it also makes the EV for the legacy auto business and dealerships and union stuff to all get trashed, bankrupt, and they can walk away with their electric car division. So that's the way to restructure and enable legacy auto to cut itself off from its failing ICE business. So which companies go bankrupt or restructure first? So we're going to look at who's already weak, and then who's handling the semiconductor shortage, supply chain problems worse, which have impacted things for 2 years. And car companies have lost about, on an average, about 7% per year for the last 2 years. And this is likely to continue for the 2 more years, 2024. And then who has the most debt, who's going to be impacted by high interest rates, because now we're going into a recession, global recession, and higher interest rates. And then whose high margin parts business can will live on for a decade or more. And then who can survive a 59% hit to their ICE business and still somehow survive from 2024 to 2028. And then in terms of the sequence, who has most dependency on China and Europe? Because those will be the places that get electrified first. Also, something that will affect when and how companies fail will be, when do the prices for used ICE cars collapse? We've had a resurgence in used car pricing because of the semiconductor shortage and shortage of all cars. But when used car prices collapse, then we're going to expose the leasing of cars, companies that do a lot of car leasing. The financials of that depend upon the resale value of cars. So when resale value tanks, then that's going to be a problem for these companies. And then I have a lot of analysis, looking at different car segments, compact SUVs, midsize SUVs, regular cars, and when they get electrified in the USA. I look at, how Tesla can maintain share. Currently, Tesla has 75% of the US EV market and 55% of the over $38,000 market in China. So you can see the over $38,000 market in China. And then I think that Tesla will be able to get $30,000 Model 3 in 2024, and then even cheaper one in 2026. And then look at how the China production, I expect an Indonesia factory, Osaka factory. And then, so there's more layers to my analysis of this. And then same thing for Europe, looking at their different markets and who's going to be making the vehicles. I also looked at the debt situation for the different companies. Volkswagen Group has the most debt, followed by Toyota, but they're the biggest companies. And they also looked at the car margins. You can see that Nissan had terrible car margins. They've only recently come out of restructuring, and they're very weak. They had to cut back on how many cars they make. And then Honda, Hyundai, excuse me, and Volkswagen also have low car margins. Tesla is up around 19%. Mercedes / Daimler and BMW are all pretty strong. And then you can have the revenue of each of the car makers in 2021. Volkswagen, Toyota is strongest, followed by Stellantis, which is Fiat Chrysler, Daimler / Mercedes, Honda, Kia, Honda, etc. Which one can go bankrupt first? I think Nissan, Renault are weak and poorly run, and a big Europe and China exposure. Nissan has about, of its close to 4 million vehicles, 1.4, 1.5 million of those are in China, and China's electrifying the quickest. And Nissan makes a lot of low to mid-range cars, which are again easier to replace. They do have the Leaf, the electric Leaf vehicle, which has sold a few 100,000 over the years, but it's got only moderate sales and they haven't followed up properly. But I fully expect those guys to, Renault and Nissan to get some kind of bailout restructuring thing to happen. Next would be, I think, Volkswagen, and then Daimler / Mercedes, BMW. Volkswagen was weakened by a $35 billion penalty for the emissions cheating scandal, where they cheated on their emissions tests. Their business is mainly in Europe and China, so they're kind of in line. Although they are the most active getting electric cars, they'll somehow need to break that away from the rest of the stuff, rest of their ICE stuff that's dying. Daimler and BMW are financially stronger, but their models are among the first to be replaced by EVs and Tesla in Europe and China. And then it'll be kind of difficult to figure out which goes next. Toyota is financially stronger, but doing virtually nothing in electric vehicles. Ford and GM have the big truck and SUV. They'll be slower to replace by 2 to 5 years. Many smaller weak companies will die, but no sense digging into which of the small ones die because they kind of fail all the time. Lucid Rivian will likely fail. The pieces will be bought by various companies. So there'll be a lot of action in terms of mergers, acquisitions, buying parts of failed companies. Here you can see that the European car sales and all car sales have kind of been down the last couple of years because of COVID, because of the semiconductor supply chain shortages. And that has been the bigger impact than EV companies taking their market share. They've lost, say 7-10% from COVID and semiconductor problems and supply chain problems. And they've only lost, so they lose like say 8 million cars a year from that, or 10 million cars a year from that. Only have 80 million total cars versus peak years of 95 million. So the 3 million or 5 million battery electric vehicles last year was less of an impact than the fact that they haven't been able to make their cars. But that will start changing probably by 2023, where losses to EVs will be more than the supply chain and other issues. And then, like I said, done breakdowns based on categories of models and that kind of thing. Looked at, who has a market share in the key regions. Looked at the growth of electric vehicles. Look deeply into the U.S. market and see who's winning with BEVs there. And then, the fact that ICE will die, Model Y and Model 3 were the top selling cars in California. California kind of leading the way. Electric car, that's going to happen in all the states where RAV4 is the next best-selling car after Model Y and Model 3, but that's a combustion engine gasoline car. And then we're going to see a lot more production from Fremont in Texas over the next rest of this year, next year, and beyond. And then you can see which are the top-selling U.S. cars and which will be replaced. I think Tesla will be able to kill with the Model 3 and Y, kill the RAV4, RAV4, the Camry, the Honda CR-V, Jeep Cherokee, the Corolla. Those I think will all be replaced, and that will be 4 times the sales. So Tesla goes from about 500,000 up to 2 million by taking out those vehicles, and then go after certain compact SUVs and mid-sized SUVs. And this how long the high gas prices last will accelerate the shift. So currently we have over $5 per gallon all across the US, far higher prices, $10, $15 equivalent around the world. So the longer this lasts, then the faster people will get rid of their ICE cars and shift over to EVs because of the, spending, $3,000, $5,000 just on fuel, makes the choice to shift to EVs far simpler and easier and faster. So thanks for listening, and hope you join me next time. And like I said, like and subscribe. Talk next time. Bye.